What's up, guys? My name is Malik. Welcome to my channel, Taxes and Side Hustles. In today's video, we are going to be going over how to set up an LLC for your business. So an LLC stands for a limited liability company. There are different forms of this that I'll be going over. And the main benefit of setting up an LLC for your business is to avoid any liability. So for example, if you have a business and you were to get sued and you did not have an LLC set up, they could actually go after your personal assets, such as your house, your personal vehicle, and things like that. Versus if you have an LLC set up for your business and something like that were to happen, they could only go after your business assets, not your personal assets. So we're going to go over right now the different types of LLCs that you could set up. So there's the single member LLC, which would be for a single owner of a business. And with that setup, you would file your taxes on your personal 1040 return on Schedule C. And with a single member LLC, you have the option to get an EIN, or you could use your social security number as well if you don't want to set up the EIN. Another form would be a partnership. So a partnership would be more than one member or owner of the business. Same idea. There's a limited liability. So if anything were to happen, they wouldn't be able to go after your personal assets, only the business assets. Partnerships are very flexible. Some disadvantages of a partnership: you can't, as an owner, pay yourself wages. You could have employees that you pay wages to, but as an owner, you cannot pay yourself wages. So any distributions or profit is going to be taxed at the corporate level. Partnership is a pass-through entity, meaning that the entity itself, or the partnership itself, doesn't have any tax liability. So when you file the partnership return, which would be on form 1065, it produces a K1, or a summary of the income and expenses for each partner, allocated accordingly based on, the percentages they own or whatever agreement they have of how much income or expense would be allocated to each partner. And once you get your K1, you would go ahead and input that or file it on your personal return or your 1040. Another benefit of a partnership is the fact that any losses from the partnership would be carried forward, any that's not used. So if you have a partnership and you file the return, the losses are limited on the partnership return to the actual basis of the partnership. And then anything left over of those losses that aren't used up would go ahead and be able to be carried forward on your personal return. And the cool thing is, it's not just netted against the next year's income of the partnership, but it actually would be deducted from all of your income, including wages and whatnot. The third type of entity would be an S corporation, and an S corp is very similar to a partnership. Same idea with the liability. There's limited liability, so if you were to be sued or anything were to happen, they can't go after your personal assets. Another benefit of an S corp is you are able to pay yourself as an owner wages. So the cool thing about that is it helps reduce your net tax liability at the corporate level, and the wages that you pay yourself would be taxed at, the personal tax rate. Again, it is also considered a pass-through entity. So you, as the S corp, would be filed on a form 1120S, but the entity itself has no tax liability. So again, it would produce a K1 after you filed that return for each member. And again, with an S corp, unlike a partnership, you could have a one member or one owner of the business, or multiple owners. And you would get a K1, or each partner would get a K1 from the S corp after filing the S corp return on the 1120S. And then that would pass through on your 1040, where you would actually pay taxes on the net profit from that K1 for each partner. It's less flexible than a partnership, but same idea with losses. They get carried forward and onto your personal return, and you get to deduct it against your personal income, which is really cool. And then the fourth type of entity is a C Corp, corporation. This is not a pass-through entity, and there's no members or partners. It's just the entity itself has a tax liability. So you would file that on form 1120, and you just pay the taxes on the entity level at the corporate rate. So next, we're going to go over some easy steps to set up your LLC. Now, a lot of people will go through third parties to set it up just for peace of mind, and if they're not confident or don't want to do it themselves, you could easily hire a company like LegalZoom, for example, or My Corporation, and you just give them the information such as the business name, address, the members, the ownership percentage of each member, and they will do everything for you, including filing it through the state, getting the articles of organization set up, and applying for an EIN. But if you do want to do it yourself, it's actually very simple, and you could save yourself a lot of money. On average, filing it through the state to incorporate or set up the LLC costs between $50 to $200 on average, depending on the state, versus if you go through a third party or hire an accountant or CPA firm to set up the LLC for you, they're probably going to charge you $500 plus. So if you do it yourself, on average, like I said, between $50 and $200. Usually it's a $100 fee, and that's all you'd have to pay. But the first step would be coming up with a name, and you want to make sure that this name is not used by any other entity. Otherwise, you won't be able to use that name. Once you have a name, the second step would be to designate, if you're a partnership or an S Corp, or if you have more than one owner of the business, you would want to designate a registered agent. And all that means is that specific person would be the one to receive any legal documents, such as, tax returns or lawsuits if, God forbid that were to happen. Third step would be to set up a operating agreement. And in the operating agreement, you basically go over the structure of your business. You would designate responsibilities for each of the members, whether they're president, vice president, manager, owner. And the reason you would want to do that, and it's not necessarily required legally by the states, some states do require it, but the main benefit is to avoid any arguments or disputes in the future with other partners, where if you get into an argument or have a disagreement, you could go back to the operating agreement and basically point out that, listen, this is what we agreed on, so there should be no argument. The fourth step, and this is one of the major steps, would be establishing or creating the articles of organization or articles of incorporation, and that's done through the state website, and it requires information, really simple stuff such as the business name, address, the personal information of the owners. If it's one owner, just that person. If it's multiple owners, each of them, and what percentage they own of the business. And then once that is done, the last and final step after you establish your articles of organization would be to apply for an EIN. Now again, if you're a single member LLC, no need for an EIN. If you don't want one, you could just use your social security, but I always recommend getting an EIN. It's very simple. You do it through the IRS website, and there's literally a section when you're on the home page that says apply for EIN, and same idea, you just put in the business name and personal information, and then it assigns you an EIN. So you don't pick the EIN yourself, it just assigns you one. You'll get a letter from the IRS in the mail like about a week or two later, and that's what you would use as the identification number on your return when filing. So that's it. I hope you guys enjoyed the video, and I hope going forward it simplified things for you if you do decide to set up an LLC or incorporate your business, which is the smart thing to do. Until next time, I will see you guys later. Peace out.